Britain already has a wealth tax, and you're already paying it. Right. Every few months, a politician pops up to ask whether Britain should have a wealth tax. And every time I shout at the telly, because we already do. Several of them. You're paying them right now. They just don't call them wealth taxes. Because wealth tax loses elections, and we're freezing a threshold doesn't. So let me show you the wealth taxes already in your life. The new one landing in 2028, and the number that once you cross it makes people start packing. Because here's the thing the Treasury keeps forgetting: the wealthy have options, they don't have to stay. Subscribe. This channel explains what's actually happening to your money, not the headline version. And a like helps it reach everyone who thinks they're not rich enough for any of this to matter right up until it does. The cleverest wealth tax in Britain is the one nobody announced. It's called fiscal drag, and it works like this. They freeze the tax threshold, then sit back and let inflation do the dirty work. The personal allowance frozen, the 40% threshold at 50,270 frozen all the way to 2031. Your pay rises to keep up with prices, you're no better off, and the tax man takes a bigger slice every single year. No vote, no announcement, no minister standing up to say, we're putting your taxes up. They just leave the goalposts and let inflation score. And it's not small. The freeze drags around 700,000 more people into income tax altogether and pushes millions more up into the higher rates. It's forecast to raise more than 11 billion quid a year by the end of the decade. That's not a stealth tax, that's the main event wearing a disguise. And here's the number nobody warns you about. Once your income passes 100,000, you start losing your personal allowance. And between 100,000 and 125,000, you hand over 60 pence in every extra pound, 60% before you've even reached the 45% top rate above that. Then there's inheritance tax, 40% of your estate above the allowances when you die. And the allowance, the bit you can pass on tax-free, 325,000 quid, has been frozen since 2009. Since 2009, house prices have roughly doubled, the allowance hasn't moved an inch. So every year, more perfectly ordinary families get dragged into a tax that used to be just for the rich. And from April 2027, they're coming for your pension too. For the first time, your unused pension counts as part of your estate for inheritance tax. The one pot they spent 40 years telling you to save into is now in the net. And that's not a proposal anymore, it's law. So, the tax it while you earn it, the tax it while you spend it, and then, just to be thorough, the tax it one more time when you're dead. Comment enough if you reckon you're taxed quite enough already. Just one word in the comments. You'd think, fine, I'll build something, sell it, and go. Capital gains tax has views on that. The rate went up in 2024. The tax-free allowance, the gains you can take before any tax at all, has been slashed from 12,300 quid to 3,000. And if you try to leave and sell, there's a rule that drags you back. Leave, sell your business while you're abroad, then come back within 5 years, and they tax the gain anyway. They have quite literally put a tax on the door. If you own a business and pay yourself in dividends, 2026 brought you a present. Dividend tax went up again, and the tax-free dividend allowance is still only 500 quid. And remember what a dividend is. It's paid out of profit the company is already paid corporation tax on. So that money is taxed once inside the company, then taxed again when it reaches you. The reward for building a business and employing people is to be taxed twice on the same pound. And if all that wasn't enough, there's a sixth on the way. The high value council tax surcharge, the one everyone's calling a mansion tax, announced last year, landing in April 2028 on homes in England worth over 2 million quid. An annual charge from 2,500 up to 7,500 quid a year, every year, on a house you already paid stamp duty on. But with income that was already taxed. To be straight with you, that one isn't here yet, and it only hits the top sliver of homes. But it tells you the direction of travel. When you've frozen everything else, the next move is an annual tax on the assets themselves. See, here's the trend, and it's the whole reason this channel exists. There's a tipping point. When a successful person does the sums and works out that more than half of the next pound they earn, plus a chunk of what they've already built, plus a slice of what they wanted to leave their kids, is all going to the state, something shifts. They stop asking how to pay a bit less and they start asking whether to stay at all. And here's the part the Treasury cannot get its head around. The people they lean on hardest are the most mobile people in the country. The top 1% already pay nearly 30% of all the income tax in Britain. The top 10% pay over 60% of it. These people do not have to stay if they do not want to. So when a politician says the rich should pay their fair share, the truth is they already pay most of it. Squeeze them past that tipping point and they don't riot and they don't write to their MP. They just leave legally with that tax revenue in the suitcase. The wealthy have options. They don't have to stay. And one by one, they're using them. That's what half the videos on this channel are about. The names you know already went and exactly how they did it. So the takeaway, you're already paying a wealth tax, several of them. You just weren't told. You can't vote your way out of a frozen threshold, but you can plan around it. You can legally arrange your income, your company, your state, and your residence so you keep more of what you build, whether you stay or whether you go. That's exactly what we do at CT Private Office. We work out which of these is costing you the most, and we build the plan to deal with it. The boring, defensible kind that still stands when HMRC comes looking. If you've built something worth protecting, apply for a review at apply.ctprivateoffice.com, on screen, in the description, and in the pinned comments. We don't take everyone, but if any of this is hit a nerve, you're exactly who we should be talking to. Like this if nobody ever explained any of this to you, because that's rather the point. Subscribe, a real tax lesson every week, and tell me honestly, enough or fair enough? Are you taxed too much? Yes or no? Thanks for watching.